Shares are slumping. They're down by about 12%. Yep, 12%. So it had a weaker outlook, delivered a 41% drop in credit card revenue and increased delinquencies. That's not a great picture. Bloomberg Technology co-host Caroline Hyde spoke with the company's CEO Jeff Gennette. Caroline joins us now. Caroline, what was the most relevant thing that you got from Jeff?
I really think it is about uncertainty around the consumer. He said, look, it's not the right time to be optimistic on our consumer right now. They have been surprised, perhaps at the pace at which delinquencies have been picking up on their own credit cards. He says, look, we don't have bad credit out there. We still got a good kind of person that they're serving with their credit cards. However, look, the headwinds are building. I've got a great quote from him really talking about how now the headwinds are stronger than the tailwinds. And we're seeing, the people having to start to pay off their student loans. He is starting to see a consumer that wants to be spending on, of course, experiences. Still a bit of beauty, and that's why Blue Mercury manages to outperform. But I think we can bring you those quotes from him really talking about when you look at these diminished overall tailwinds that they currently see in the market, there is this worry about the steadfastness of a consumer. That's why they've been taking such diligence about their inventory, cutting it some 10%. And we are seeing overall, therefore, some of the upbeat nature coming from analysts saying, look, they have managed to be pretty surgical, as he pointed it out, when it comes to stripping down their inventory and making sure that they've been making investments in digital to be able to drive that.
Yeah, so I'm hearing a lot of retailers increasingly becoming quite cautious. They're managing working capital a lot more carefully. They may be drawing down in terms of their investment expectations. How is that going to affect that digital push, Caroline? Are they going to be sort of pulling back on that a little bit, or is it still the main emphasis when it comes to spending money?
Still a key commitment, and that was what I wanted to see, because this is a company that actually, Jeff's saying, they don't feel they're sort of hitting the ground running as much as they could be on digital. They feel they've got the prowess. They feel that they've been investing, but perhaps they're not seeing those returns. Like digital sales down some 10%. That's largely an environment that we are in terms of a macro perspective. But they've just hired a new executive to be driving forward their digital focus, and they really feel that digital can continue to be an area that is healthier, is what he said, of where they are today. They think that the future of digital can grow more aggressively within the balance of the company. They see it as part of their growth vectors. Just think, in particular, they've got a marketplace, right? So this is how you go into a Macy's, but you do it online, and perhaps you get a far more broad remit of what you could be buying at Macy's. I think of, well, garments, I think of beauty, but actually you can go and get gaming equipment, consoles and the like. If you go to their marketplace, that's been a big driver of growth for them. On Macy's, they're now starting to test that on the Bloomingdale's side of things. Is that luxury buyer going to want to access more brands in that particular online way?